Yeah, day 9 of the series. We'll be doing questions from the Indian perspective today. And yeah, let's just get started. Okay, so the first question is Table 1.1a presents the balance sheet of Indian financial institutions as on 31st March 2018. Table 1.1b similarly presents the balance sheet of the manufacturing companies as on the same day. What major differences do you find between these two balance sheets? Compare the sources of funds of the Indian manufacturing companies with their American counterparts. Can you explain the difference? Um, okay, so we've been given the balance sheets of manufacturing companies of both Indian and of American origin. And we need to find the differences and yeah, basically compare them. So table 1.1 is the Indian one. The A is Indian, the B is wait one second. Also, the A is okay. Both tables are Indian. The first one is the commercial bank's balance sheet. Second one is the manufacturing companies. So what I'm guessing is that the first one, table 1.1, since it's balance sheet of Indian commercial banks, is going to have majorly financial assets compared to real assets. So the real assets to total assets ratio is going to be low, and in 1.1b, in manufacturing companies, the real assets to total assets ratio is going to be high and much higher than uh, the banks, basically. Okay, so as we can see, the major differences I find between the two balance sheets are net fixed assets. So net fixed assets for the first one is uh, 12 million crore. I don't know how to say that, but yeah, the notation is a little bit weird. But yeah, and then that's for the banks, and then net fixed assets for manufacturing is way more than that. So it's like in manufacturing is 6 times more than in banks. Then total financial assets are more than double in banks than in manufacturing. So this we guessed. And then loans and leases are almost 9 times more in banks than manufacturing, since that's their business. Net worth is more than double in manufacturing than in banks. Total liabilities is more than double in manufacturing than in banks. Net worth is more than double in manufacturing. Okay, that's just a repeated point. Let me just delete that. So yeah, Indian manufacturing firms rely heavily on bank loans and internal funding due to underdeveloped equity and bond markets, while US companies benefit from mature capital markets and robust private equity ecosystems. In India, corporate bond issuance is limited and IPOs are less frequent compared to the US, where public and private offerings are common. Government incentives like Make in India and PLI schemes support Indian manufacturing, while US firms leverage tax benefits and public-private partnerships. Foreign investment is vital in India but faces regulatory barriers, unlike in the US, where freer capital flow and stable markets attract global investors. Okay, that was question number one, comparing balance sheets essentially. Question number two, one second. Yeah, question number two is visit the website. So we have to visit a website of the National Housing Bank of India, NHB, to find more on the important role it has played in starting mortgage-backed securitization in India. NHB plays the first ever MBS successfully on the Indian capital market in August 22nd, 2000, the year 2000. By the end of March 2007, NHB had successfully placed 14 MBS in the Indian capital market. All the issues have been subscribed by the insurance companies, mutual funds, financial institutions, and commercial banks. Part A is, why do you think that there is no securitization of mortgaged receivables after 2007? Part B, NHB plans to play a market making role by offering two-way quotes to the retail players as well. Given the global financial crisis of 2008, what advice will you give to the NHB? So let's just go and visit the website once. If I can type in the URL. So the link is https. Okay, I'll not read it, but yeah. HTTP. Okay, I'll read it. HTTPS colon slash slash test dot nhb dot org dot in slash capital F financial slash NHBS underscore experiences dot php. That's it. So let's see if this works. Site can't be reached. Wait, let me put the brackets. Maybe that'll work then. National Housing Bank. Maybe they changed the link or something. This book is a few years old, so okay. So basically, visit the website of the NHB, National Housing Bank of India. So that's where I'm at right now on my laptop. Yeah, it's a very bad website, to be honest, but yeah, is designing is very, very bad. But yeah, let's just look at our answer. Stop wasting time there. Okay, so the first part is, why do you think there is no securitization of mortgage receivables after 2007? So the securitization of mortgage-backed securities (MBS) sharply declined after 2007, primarily because of the financial crisis and its aftermath. Here's why: loss of investor confidence. So the 2007-8 crisis revealed significant flaws in the MBS market, particularly in the quality of the underlying mortgages. Example: subprime and ninja loans, which we know about. Ninja loans is no income, no job. So basically, they were giving out home loans to anybody who would take them, even if at teaser rates, which they could afford. But eventually, those rates would be changed, and eventually, inevitably, they would default on the loan and the house would be evicted. So they did this a lot, which reduced the quality of the underlying mortgages, as we know. So then, when homeowners defaulted, MBS values plummeted, leading to massive losses for investors and shattering trust in these securities. Investors became much more cautious, making it difficult to securitize mortgages at the same scale. So that's one point. Second point is increased regulation. So following the crisis, regulatory changes were introduced to prevent similar risks. The Dodd-Frank Act in the US imposed stricter requirements on the lenders, making it more challenging to package risky loans into MBS without transparency. Additionally, the Volcker rule limits banks' ability to engage in certain speculative investments, including holding risky MBSs, which reduce demand. So that's the second point. Third point is higher quality standards for mortgages. Regulations like the Qualified Mortgage Rule (QM) were enacted, requiring lenders to ensure borrowers could repay their loans. This change reduced the volume of subprime and riskier loans available for securitization, as these high risk loans were ones were the ones heavily securitized before 2007. So basically, they fixed the problem essentially, and they made it so that banks and all these firms and all these investment houses couldn't lend out the subprime and ninja loans anymore, because that was what caused the crisis in the first place. Point four is a shift to safer mortgage products. Since 2007, the MBS market has moved towards safer government-backed mortgage securities like those issued by Fannie Mae, Freddie Mac, or Ginnie Mae. Ginnie Mae, I don't know what that is, but essentially the same thing as Fannie Mae and Freddie Mac, which we've read about. So FNMA and stuff like that. So yeah, um, because they carry less risk for the investors due to an implicit or explicit government guarantee, private label MBSs securities not backed by government sponsored entities have remained limited. Reputational damage and risk aversion. The firms involved in the MBS securitization faced reputational and legal issues after 2007, leading to lawsuits and settlements. This damaged the appeal of MBSs and made financial institutions and investors more risk averse in participating in or supporting similar activities. Although MBS markets still exist today, the volume and nature of securitization are much more regulated and conservative, with a focus on higher quality government backed mortgages instead of high risk, complex products that dominated before the crisis. Part B, the question is NHB plans to play a market making role by offering two-way quotes to the retail players as well. Given the financial crisis, what advice would you give to NHB to play this market making role essentially? So, given the lessons from the crisis, if the NHB plans to act as a market maker by offering two-way quotes to retail players, here are some key recommendations to manage risks effectively and maintain market stability. Prioritize transparency. Ensure that NHB provides transparent information on the underlying assets, such as mortgage security, loan to value ratios, borrower credit scores. In any mortgage backed securities, MBS, or other products it offers, transparency will build trust and help retail investors make informed decisions. So, basically, the first point is prioritizing transparency and honesty and integrity. That's pretty self-explanatory. Second point is maintain high quality standards for MBSs. Focus on securitizing high quality and well underwritten mortgages to prevent the creation of risky low quality MBSs. This means working only with loans that meet strict criteria, such as those under qualified mortgage standards, to ensure borrowers have the ability to repay. Implement strong risk management and establish strict risk controls, including stress testing for potential economic downturns. NHB should assess how its MBS holdings would perform under adverse scenarios to avoid excessive losses in times of crisis. What else? Fourth, there are a lot of points actually. 9 points. Educate retail investors. Many retail investors may not fully understand the risks associated with MBS and other financial products. NHB should develop educational materials and transparency tools. So basically, education, information, trust, regulation, risk aversion, high quality, uh, uh, yeah, avoiding over reliance on ratings since ratings were compromised before. So that's also another thing. Uh, encourage diversification for investors. So basically, playing it safe. Don't put all your eggs in one basket, as they say. Establish a liquidity buffer. So basically, they should have a plan B. If there's market stress, they should have a strong liquidity buffer to handle high redemption volumes. in case of market stress. So that's that. Point 8 is monitor and limit leverage. Again, just being cautious and not letting anything get out of hand. Point 9 is regulatory compliance and coordination. Work closely with regulatory bodies to ensure compliance. So yeah, pretty much, make sure everything's good, make sure everything's safe, everything's legal, everything is under control as it should be. Not letting greed get anywhere near the game, essentially. But we all know that's bullshit, you know. Sorry, but like, yeah, greed is part of the game, and at the end of the day, nobody really plays it by the book, 100% at least. You can be, have integrity and be honest and stuff, but still be a little greedy. So it's not only in excess, it's bad. But I guess greed is excess, so it doesn't really make any sense. Anyways, let's stop talking like that. Third question is taking advantage of internet revolution. Online brokerage flourished in India. Visit the websites of the following 5 online brokerage houses: ICICI Direct, SSKI, Sharekhan.com, HDFC Securities, India Infoline, Motilal Oswal. And then part A is find out the total brokerage costs you have to pay for buying shares worth. I really need to understand what this is. 10 lakhs, I guess. Yeah, 10 lakhs. 10 lakhs. Which one seemed to be the most profitable brokerage house? Do you see evidence of any hidden costs? So let's do that actually. ICICI Direct. Wait, I need to type in the URL. One second. ICICIdirect.com. Okay, this website is much better than NHP's website actually. This is where my dad used to work for 7 to 8 years back in the late 90s and early 2000s. So yeah, this is fun. So what do we need to find? We need to find the amount of brokerage costs I have to pay for buying shares worth 10 lakh. So how would I find that? Maybe we go to invest, stocks. Okay, pricing is the thing. Plan for traders, explore our brokerage plans. Okay. So pricing plans. Okay, 1 second. This is pretty complicated, but there are a lot of different rates actually. Like there are different rates for buying and selling, and there are like a lot of different charges: equity futures, equity options, commodity futures, commodity options. So assume when it says buying shares worth 10 lakh, it means equity, and I would estimate that it's statutory charges, demat surcharges. Oh, this is pretty complicated actually. Wait, I don't know which particular 1 second. Okay, ICICI Direct Prime Brokerage annual payment 299 and 0.25%. Acha. Okay, prime plans, I value plans, delivery brokerage. Okay, there it is. Okay, 7 rupee per 10,000. 7 by 10,000. It's 0.0007 times 10 lakh. So we'll have to pay like 700, I guess. Delivery brokerage, unfunded amount in margin, trading facility. Okay, this is pretty complicated, not going to lie. Mhm. Let's say I'm a long-term investor up to 10 lakhs. What's it gonna do? Prime 299, annual prime reduce brokerage 0.25%. 0.25%. Okay, so yeah, 0.25 and then percent times 123. Yeah, 2500 we'll have to pay if we buy the 10 lakhs in shares at once plus the 299. So that would be what, 227.99 basically rupees. Now we move on to the next site, which is sharekhan.com, www.sharekhan.com, SSKI. So let's see what's up there if it loads. Oh, it's Mirai Assets. That's good. I think I have a small stake in Mirai Assets in my portfolio, which my dad manages again. I haven't seen it in a long time, but yeah. So yeah, brokerage charges. This is really fun because this is like this is practical stuff. This is not theory anymore. So I just want to get so deep into this book and this world. Like I'm excited because I feel I've finally figured out a way to stay consistent with it. I don't want to speak too soon, but it's day 9, so I'm happy. I am. Maybe this will be a thing. I don't know. Let's see. Okay, full service benefits on brokerage and other charges. Account opening charges 0. Free. Okay. Equity delivery brokerage. So I'm assuming what the common assumption about buying shares is equity delivery is that you buy and you hold, because the others are intraday and options. Options I know, and intraday I'm assuming is like you buy and sell during the same day, large amounts to make profit. That's day traders essentially, I guess. So it's saying 0.30 on trade price or minimum 1 paisa per share. Acha. Okay. So this has 0.30. Okay, it's still the same. So there is no other charges. So this is like this is 200 rupees more than the ICICI Direct Prime brokerage. So this will be at 3,000, coming in at 3,000 for 10 lakh shares. Not for 10 lakh worth of shares, not 10 lakh shares. That's big. Anyways, next up is HDFC Securities. So we have to go to www.hdfcsec.com. Okay, big website again. So far I find Mirai Assets, Sharekhan Mirai Assets website to be the best and cleanest. ICICI is second best, HDFC third best I guess, and NHB is just bad. Again, because it's a government website, so you can't expect it to be good. Anyways, where do we find the brokerage costs? Markets. Research. Calls. Products. Brokerage. Okay. Distribution products. Invest in US stock. Personal finance. So much stuff to learn, and I sit here watching shows and Instagram and YouTube all the time. I'm glad I'm finally doing this. It's taken a long time, but yeah, I'm still 19. I can learn. Um, where is the brokerage costs here? Oh yeah, there it is. Open trading account, 0.01% brokerage. That's crazy. Uh, hmm, hmm, hmm. Brokerage plans. There it is. Just gotta search. Yeah, okay. Brokerage plans. There are a lot of plans actually. Optima, Maxima, Premia, Platina, Supreme, Elite. Okay. So delivery brokerage actually goes down as higher price you buy, higher plan you buy, basically. Okay. So delivery brokerage for this is also is 0.30 for the lowest plan. Value plan costs 9.99. Damn, this is expensive. Okay, HDFC Securities is expensive. Okay, so 0.50. No, on this it says 0.30. But then again, there's 1,000 rupees for the value plan. Gotta pay monthly, I'm guessing. Value plan at the rate rupees. Will you be paying this monthly, yearly? What's the deal? I don't know. I'm assuming monthly because plans are monthly, unless it says annual plan. Only activated if your POA is active. Okay, whatever. Bhai. It's you know what? It's expensive. Okay, it's expensive. It's 0.30 already, which is like 3,000 plus 1,000. Free cash volume as well. 10-year lifetime. Oh, so you paid one time only? That's a good deal, actually. Yeah, save a lot of money on that one. Elite. Anyways, so whatever. We went there. Now we went to we go to India Infoline. 20 Pro. Maybe this one's the best one. India Infoline might be the best actually. www.5paisa.com. Oh, I missed a W. Funny. This one's looking good. It's pretty clean. Physics wala IPO is live. That's cool. So, yeah. Where do we see the pricing? There it is. You already have to be rich to get rich. But yeah, what is this? Zero commission. Okay, there it is. Equity delivery. Equity delivery is what is the total? Jesus Christ. 0% brokerage, believe it or not. Wow. What? It's not possible. Transaction charges, CTT. I don't know what all these terms mean actually. STT, CTT, stamp duty. Brokerage 20 rupees per order, it says. It's negligible. I mean, if you order all the 10 lakh shares, not 10 lakh worth of shares at once, that would only mean you're paying 20 rupees for that whole transaction. Which is nothing. It's a packet of chips. Not even that actually. So it seems that 5paisa, which used to be known as India Infoline or whatever, it's the best. Now we go to Motilal Oswal. .com. This is also pretty good website. Pricing. Pricing. Let me search brokerage. Can't find. 1 second. Support. Learning center. Platforms. Market. Invest. A lot of calculators here. Open Demat account. Get started now. Become a partner. Franchisee partner. IFA partner. Damn, if you pay, you can get daily recommendations for intraday. Highest quality research, it says. So, cha. Damn. 0.09%, 2%. That's crazy. Oh. But yeah, I can't find the brokerage pricing here. Enter Demat account. Okay, I'll just go with what I've written here before when I did this the first time. So Motilal Oswal is also at 0.2, so 2000 for 10 lakh worth of shares. So therefore, India Infoline is the best brokerage house with zero fees on equity. So that's good. Okay, part B, finally. It's the longest time for the question, but it was fun. It was fun going to all these different websites. And yeah, so part B is, do you see evidence of any hidden costs? So I don't really see evidence of hidden costs per se. All the brokerage houses have their respective plans and premiums, subscriptions, etc. And they're priced accordingly based on if you are a casual investor using their savings or an active trader working with a lot of capital day to day. Hence, they charge people separately. Although I haven't analyzed their pricing policies and other aspects of their service to say for sure that there are not any hidden costs. I'm sure if I dig deep enough, there must be something hidden everywhere. Okay, that's vague. That's not how I answer a question. That's not how I should answer a question, rather. Anyways, now we have a few e-investment exercises. And that's it. They were done with this chapter, actually. And that's only, 9 days? And not even like 40-minute videos every day. It was like very, very, have some 15-minute, some 20 minutes, some 25, some 240 plus minutes, I think. So yeah, I mean, if I study this 45 minutes a day, if I can just knock them out every day without fail, then I think I'm gonna be able to do this book pretty quickly, actually. If I did this like 45 minutes every day, I would have finished this maybe, I don't know, 5 days ago, 4-5 days ago. So that's good. That's actually pretty good. Yeah, I'm happy. I'm really happy. Anyways, let's move on. E-investment exercises. So first question is, log on to finance.yahoo.com and enter the ticker symbol RRD in the get quotes box to find information about R.R. Donnelley and Sons. Achha. But I've actually changed it to Apple. Oh, okay. So I've written here, instead of R.R. Donnelley and Sons, I'm choosing a separate company since RRD is a private company and its detailed financials are not available on Yahoo Finance. So maybe when they wrote this book, it was a public company, and then they bought back all the shares and made it private again or something. I don't know, but um, I'm pretty sure if I wrote this, then it was a roadblock. So I changed companies, and I'm choosing Apple Inc. to conduct my case study on, basically. So all the questions are the same, only the company is different now. Um, so yeah, let me just go on to finance.yahoo.com. Okay. Pretty text heavy website. So click on profile. Okay, so we need to go to Apple Inc. Apple APPL. Let's see. Okay. Okay, so we've opened up Apple Inc. Now we need to click on profile. So where is profile? Profile. There it is, profile. Okay. Opening up the profile. Yeah, okay, we're here. What is Apple's main line of business? So I'm substituting Don Lee with Apple, okay? So Apple's main line of business is in one second. Key executives. Okay. Yeah. Apple Inc. designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories worldwide. The company offers iPhone, which is being used to record this video right now, a line of smartphones, Mac, which I'm doing the the work on, I'm reading off of. So I'm literally using the two products it mentions, which is very funny. But yeah, a line of personal computers, iPad, a line of multi-purpose tablets and wearables, home and accessories comprising AirPods, Apple Vision Pros, Apple TV, Apple Watch, Beats products, which they bought off Dr. Dre, actually made him a very wealthy man. HomePod, as well as Apple branded and third party accessories. It also provides AppleCare support and cloud services and operates various platforms, including the App Store, that allows customers to discover and download applications and digital content such as books, music, video games, and podcasts, as well as advertising services include third party licensing arrangements and its own advertising platforms. In addition, the company offers various subscription based services such as Apple Arcade, game subscriptions. Okay, so on and so forth. Lots to talk about. So we've covered the major portion of its line of business and business model, so to speak. And part B of the question is now go to key statistics. How many shares of the company's stock are outstanding? So key statistics. One second. Summary. Website's a little bit slow. I don't know if it's my net or just the website itself, since it's so information heavy. Key statistics, if I can find that. Key statistics. I mean, there's statistics. I guess that's pretty much it. Let me click on statistics. Okay, so what do we need to find? We need to find company stock. So basically shares outstanding. We need to find that. Shares outstanding. Shares outstanding. Hmm. Hmm. Can't really find. Okay, there it is. There it is. Shares shorts and percent. Short percent of shares outstanding. Implied shares outstanding is 14.78 billion. Okay, perfect. So shares outstanding is 14.78 billion. What is the total market value of the firm? What is the total market value? I mean, that would just be shares outstanding times the share price. It should be given somewhere. Price history, statistics. Market value, market value. Equity, scale, change, beta, stock price history. 5-year monthly, that's the beta, that's different. So you moving average, 52-week low, 52-week high, 50-day moving average. So I'm assuming the market value is like 273 times. Wait, okay, wait, one second. Market cap. Is market value and market cap the same thing? Market value to the profits. I think so, yeah. So then, I mean, if that's true, enterprise value slash revenue. Okay, it has to be 4.04 trillion. Let me just check. 1 second. Yeah, I just copied it. Anyways, market cap is at 3.45 trillion. Okay, so wow, it's increased by like 0.6 trillion. That's insane. 600 billion. The last time I did this question, the answer was $600 billion short. Shares outstanding. What? Okay, that can't be right. Wow. Okay, that has to be wrong actually. Shares outstanding of Apple. Let me just search that actually. How many shares common stock are outstanding? How many shares of Apple stock are outstanding right now? 14.78 billion. Yeah, okay. Let me just correct or just like sort of change the numbers right there. 14.78. I don't know if they had like a big sale or something, or that I'm just wrong there. But yeah, and then the market cap is at 4.04 trillion. Also, does market value and market cap the same mean the same thing? They are not the same. They're often confused. Market cap is the value of the company's outstanding shares. Market value is a broader, more comprehensive debt cover. Okay, so then that's not the same as market cap. Okay, market value of Apple right now. That is just the price, right? Market value of Apple right now. I mean, if market value and market cap are not the same thing, then what is market value? I mean, it just keeps giving me the price, and what? Even ChatGPT said market value and market cap are the same thing. Is market cap and market same thing? So then what is the market value of Apple? Okay, it's still giving me 4.04 trillion, so we'll just take that and run with it. It's not changing, so that's fine. Last fiscal year profit we need to find in the recent fiscal year, sorry, RFY or LFY, whatever you want to say. Fiscal year ends profitability. I read that somewhere. I found that. 1 second. Last fiscal year's LFY. Okay, we need to find LFY. Where is LFY? LFY. TTM, MRQ. Trailing 12 months. Can't really find it here actually. Do not know. Fiscal year ends. Financials maybe? This is pretty complicated. It's not as easy and convenient as reading something off a screen or a book. So yeah. Okay. Yeah. Okay. Net earnings before interest, taxes, depreciation, and amortization. Okay, I'll just search it out. Apple profits LFY. For his last fiscal year, which ended September 28th, 2024, Apple reported net income profit of $93.736 billion. I do not think I can find that anywhere actually. Yeah, it's definitely not here. Maybe. Yeah, it's not here, but whatever. So yeah. Oh, 7.74. Okay. Oh, I guess that one must have been the same. Yeah, okay. So I probably did that after. Okay, makes sense. Part C is look up major hold. Okay, we have to finish quickly because I got a class in 20 minutes. So just go through this really quickly. Look up major holders of the company's stock. What fractions of total shares is held by insiders? So major holders are institutional investors, Vanguard Group, BlackRock, JP Morgan Chase, Berkshire Hathaway, etc. Total shares held by insiders, 2.06% of all shares. So that's what it is. Part D, the average price target by analysts is $2.44.48. The current price at which the stock is trading is okay. Analyst opinion. We need to go to analyst opinion. So analysis, because now that's changed. So yeah, analyst opinion. What? I'm confused, but yeah, gap normalize. This is very confusing actually. Sorry, this is a very drawn out video. But yeah, I think we'll call it there for that part. I can't really get into it too much right now. I don't have time. Company's total assets. Okay. Answer number 2. Question number 2. Go to Securities and Exchange Commission website, www.sac.gov. So this is the regulatory body in the US for securities. It's good. Yeah. They catch people like Jordan Belfort. It's fun. Anyways, actually no, that was the FBI, but yeah, or SEC. I don't know, maybe both. But yeah, what is the mission of the SEC? What information and advice does the SEC offer to beginning investors? That's part A. The mission is at the Securities and Exchange Commission, SEC. We work together to make a positive impact on the US economy, our capital markets, and people's lives. Since our founding in 1934, at the height of the Great Depression, we've stayed true to our mission of protecting investors, maintaining fair, orderly, and efficient markets, and facilitating capital formation. Our mission requires tireless commitment and unique expertise from our staff of dedicated public servants who care deeply about protecting the investing public and others who rely on our markets to secure their financial futures. The SEC offers beginner investors essential advice to make smart, safe decisions. It explains investment basics like stocks, bonds, diversification, and the risk return trade off. Investors can use tools like Edgar for company research and broker check to verify advisors. It highlights fraud, warning signs, guaranteed returns, unregistered investments, and pressure to act quickly. The SEC also emphasizes understanding fees, settling long term goals, and starting small with consistent investments. Free resources, calculators, and educational content are available on investor.gov. Stay informed, plan wisely, and report suspicious activity to the SEC to protect your investments. So that was part A. Part B is go to the NASD website, www.finra.org. So let me just do that. And what is its mission? What information? So same sort of question. FINRA. So NASD, now FINRA website. Mission to protect investors and ensure market integrity through regulation and education. Advice for beginners: learn investment basics like stocks, bonds, and diversification. Use tools like BrokerCheck to verify financial advisors and firms. Understand fees and how they impact returns. Be cautious of scams promising high returns or pressuring quick decisions. Start with the long-term financial plan and invest consistently over time. So that is pretty much the same. They even recommended the same BrokerCheck thing, tool, whatever. Now we move on to the third part C. iOSCO. www.iosco.org. Same sort of question. What its mission and information? Probably gonna be the same thing. Yeah, basically mission is to enhance investor protection and promote fair and efficient and transparent markets. Advice for beginners: understand risk of financial products, educate yourself, diversify. So essentially the same thing. And yeah, that's good. That's important to know. This is a very, very long game, and I mean, if you want to make money quick, you might as well go to a casino and gamble, because trading is essentially that. And if people tell you otherwise, they're just scamming you. So yeah, if people are consistently making returns like day trading and stuff, they have a source of the information that you don't have. They have an edge that you don't have and cannot get by reading books or newspapers or whatever. So you cannot predict the market. Nobody can. That's the beauty of it. So yeah, this is my last, not last, actually I'm pretty young, so even if this if even if my bad, even if this doesn't work out and this doesn't become my life or my career or whatever, I want to commit myself and apply myself deeply into this and see what's on the other side, you know. Either I am not into it and this is not for me, or it is for me, and this is what I'm going to do my whole life and be happy to do. And no, that doesn't mean that I want to be a corporate lackey my whole life doing a 9 to 5, you know, and retiring one day when I'm 65 just full of regret. That's not what I mean. But if this is something that I'm truly passionate about, I can see myself doing like my whole life, that'd be great. But I want to see either or, you know. I don't want to half-ass it anymore and be in the gray all the time. So, anyways, that's it. Pretty long session, maybe an hour today, I guess, something like that. But yeah, we are actually officially done with the first chapter, and I might change some things on the channel. I mean, I know nobody's watching, and I don't care. It's mostly for me only. But yeah, I want to change the thumbnail. I want to change. Maybe I'll put the titles in the sense key, because it's a big book. You know, there might be hundreds of days. So if somebody in the future, or even if I want to like learn or like revisit a particular topic or something, then I should know which video has what topics. You know what I'm saying? Before it gets very confusing and mixed up. So I might do that. I might do that and still keep the like day 1, 2, 3 format. So I'll just like label it like the concepts or the parts, like 1.8, 1.7, 1.6, or whatever I did, or like problem sets for the first chapter, like PS1, something like that. And then I can say like the day 1 or 2 or whatever, so that it's very compiling is good, neat, like Dexter. But yeah, it's my fourth rewatch of Dexter, so I'm just like, yeah, obsessed. But that was a good session. I'm proud of myself for doing that, because yeah, I needed to do that today, right now. It's earlier uh, than I'm used to doing these. It's like 5:49 right now, but yeah, good one. And I'll do another one tomorrow. Tomorrow we'll begin with asset classes and financial instruments, which is chapter number 2. So we're done with the first chapter, and I'm very happy. So yeah, thanks for watching. Again, if anybody ever watches this.